Welcome back, everybody, to another episode of AML Conversations. My name is Joe McNamara. I am the Director of Solutions Marketing here for AML RightSource. And joining us again today is Managing Director of Commercial Affairs of EMEA and APAC, Mark Sully. Mark, I'm so glad that I didn't scare you off after last conversation. I'm really looking forward to getting a chance to converse a little bit more around some of the stuff we're going to talk about today. But before I do that, for anybody that missed episode 1, I highly encourage you go back and certainly listen to it. But if you're catching us out of the blue, Mark, why don't you just give us a quick overview in terms of who you are, what you focus on, kind of set the scene for the conversations that you're having, especially with our clients and folks out in the financial compliance space.
Yeah, hi, Joe. So I'm Mark Sully. I look after EMEA and APAC for our commercial relationships. So all our clients really trying to drive effectiveness and efficiency across the field, across both technology, people, and advisory. So it's great to be here, Joe.
Yeah, looking forward to it, right? And so obviously last time we kind of talked about the AI reality versus, the aspirations that kind of come with that. But today I kind of wanted to focus primarily around, crypto firms. Obviously, crypto is a growing component within the global financial space. And I would say, they've got some very interesting characteristics. I think the most notable one is just how quickly they seem to move. And so from your perspective, as these crypto firms are moving a lot faster than most players in the space, when it comes to automation, obviously they're doing it, it seems like at a very lean pace. But where does that combination tend to create problems for folks that essentially are trying to move fast, break things, and certainly be the disruptors that we've come to know them to be?
Yeah, so I think if you look at the traditional banking space and the governance, oversight, control, parallel testing, and running, then that's often been a slower burn when bringing in new technology. It's a very dynamic, volatile space, the crypto space, and it's evolving constantly. And with that, they're a bit more open to trying and testing technology, but also they're probably not under the regulatory scrutiny that some of the traditional banks and the payment services firms to a certain extent have been. So it's an interesting challenge for them. They were willing to be able to take a bit more risk and try and move forward. At the same time, we're trying to also highlight some of those challenges that by just implementing something without testing it fully, are there gaps? Are they missing things? Have they fully got the right amount of controls in place to make sure that they are performing the full due diligence that they need to and the outputs that they expect?
If I was going to ask, I definitely will. I'm going to ask you to expand upon that a little bit more, right? So when we're looking at these players through the financial compliance lens, and certainly taking into account the various characteristics that differ from the traditional space, there's kind of this window between when technology gets promised and when it actually lands. In your experience or in conversations that you're having, like how is that kind of materializing for these firms? And certainly to your earlier point, how is that impacting their overall compliance stance or kind of their risk appetite? If I was going to sum that up, what are some things that they should really be focused on to kind of keep them out of any kind of hairiness down the road?
I think there's always an interesting challenge between sort of the compliance, finance, and operations and the business, right? So that trying to understand who needs to do what and by when. And the AI budget and bubble has really been an interesting one because everyone's trying to jump on that bandwagon and how much can they reduce cost? How much can they potentially reduce headcount and drive more effectiveness and efficiency? And there's some big claims, and I know we've seen, 30 to 50% or more in terms of efficiency gains that someone thinks they could get through automation. And I don't disagree that won't come. Is it right this moment, right now? I think there's a number of POCs and people are trialing it. The quality of the data, I think we mentioned this in sort of the episode 1, is a real challenge. And therefore, over-promising and under-delivering is a challenge, especially when we're seeing the volumes to continue to increase. So it's not like they're staying stagnant. Volumes are up. And then people are trying to say, how do I do more with less? And that's where I think technology will start to come in. But do I see a 50, 60% gain straight off? No, I think it will evolve that way. And we might start with some smaller gains first of all. I was on with one of the crypto providers. They gave us a demo of what they'd done last week. They claimed a 38% efficiency gain within part of the process, which was more focused around the second level investigations process. But even with that, they haven't reduced any of their people because their volumes have increased. They've just maintained at a steady state. So I think that challenge of do more with less is going to be a real thing around, and then trying to get the most out of what technology can bring. But I'm not seeing an end-to-end evolution of chatbots and talking to each other and getting rid of the analysts quite yet. I think that's a few years away at least.
I agree with you. And I think it does remind me of the previous conversation we had, right, around this concept of do more with less, right? But then there's almost this overarching expectation that, okay, because we can do more with less, therefore we can be less or we can be smaller. And the reality is, as you kind of laid it out in the last conversation, that's really not the case. In most cases, it's just unlocking capabilities for your existing team and allowing them to do more with the same, right? Or in this case, with a better set of tools. But, similar to kind of what you had expressed in our last conversation, I really liked the phrase, what's your backup plan? And so as you're having these conversations and you're kind of asking these folks this, like, what are they saying? And like, what does that conversation really look like, especially in this space where, again, a lot of it is novel. A lot of it is being, written as they go. But certainly, it's probably got to differ from some of the more traditional, banks and FIs that you're dealing with.
Yeah, I think this space is really interesting. And what we have seen is the sort of crypto is 24/7 and it doesn't sleep. And therefore, we've had to adapt. And I know that we've opened 24/7 operations to be able to help some of the crypto clients that we work with. But we're seeing that continuous involvement, and also just the willingness of new markets, new tokens, new coins, then also the sort of integration between crypto to stablecoin and potentially fiat with some of the players. And I think we're seeing that convergence. So the ability to be able to, everyone's looking at AI and can we automate a lot, but the backup plan is you still potentially need people to be able to do a lot of this work. And therefore, what I would say is planning is something almost sometimes secondary, in terms of in the crypto space, but just because it is so dynamic and you open a new space, suddenly the volumes flow, you're almost playing catch up. So I think there's a need probably for how can technology help, what does that deliver and by when, but also what is your backup in terms of you've got to be able to still be doing the relevant compliance work, utilizing analysts to a certain extent to do that work at the same time.
It's the aspirational versus what's the reality, right? Like, what are we doing day to day? So I get that. And I think that's solid advice too, to sit down and actually just try and plan, right? I don't think anybody expects you to have all of the answers up front, especially in the space that you're in. But I wholeheartedly agree with you too. It is an interesting convergence that we're starting to see in terms of just these different methods and means to essentially move value. Any other thoughts or kind of final thoughts on this space?
I don't think crypto's going away. It's not going to go away, right? It's going to continue to grow. And we've seen that even the financial institutions are starting looking to how do they get into the stable coin and the crypto coin and offer that out as part of how people do their investments and wealth management. So as that sort of openness and market grows, then I think the governance and oversight is critical. And we've also then seen there's recent news stories about one of the cryptos and some of the sanctions work that may or may not have happened. But there's a lot of insight on people wanting to look at what's happening, especially with the geopolitical situation at this moment in time. And therefore, how are funds being transferred and are all the relevant sort of checks being put in place from both from a sanctions and a KYC and a transaction monitoring perspective?
I think there's a lot more to pull in terms of a thread there. So, in the meantime, though, I do appreciate you joining us this morning. I'm looking forward to hopefully getting a chance to talk to you again, and maybe we can even cover some of those, if not all of those topics.
Sounds good. Great to talk to you, Joe. Thanks.